Hey, what's going on everyone? It's Griffin here, and today I wanted to make a really quick video about a stock that I've personally been following for a couple of months now, and I know a lot of viewers have also been following. The stock is WELL Health Technologies, ticker WELL on the Toronto Stock Exchange, which has just surpassed the $1 billion mark. I've actually made a couple videos quite recently about WELL Health, so in today's video, I'm not going to be recapping their business model and all that type of information about the company because I've covered it extensively in previous content. So I'll actually be leaving links down in the description to those videos if you want to learn more about what this company does. The reason why I'm making a follow-up for WELL Health, even though there have not been new quarterly figures that have been released for the company, is because the stock is going absolutely crazy right now in the market, having rallied above 400% year to date, which is just insane for a company on the TSX. And with this, I've had multiple viewers reach out to me on Instagram or even down in the comment section asking me, what's going on with this stock? Why is it rallying so much? And really, what does the future hold in my opinion? So in this video, we'll be speaking about what I personally think is going on with this company and why the market is reacting so positively to WELL Health. And just for reference here, I actually purchased around $700 worth of WELL Health stock back on July 16th, which is when I released that first video speaking about the company. And at that time, the stock was trading at right around $3.12. And since that trade, I have not actually bolstered my position because, as mentioned in previous videos, I was personally just waiting to see more quarterly figures being released for the company, since this is still somewhat of a new industry and a new company in question here, but the market really seems to be taking a liking to this company. Currently, this places my total return at right around $1,200 or 153% return on investment. So things are doing pretty good for the stock, but we're going to be speaking about what's going on and whether or not I believe that moving forward, this is sustainable. So let's get right into it. All right, so I know I said I wouldn't be recapping what this company does, but just for quick reference here, if you're not really sure what WELL Health is, for some added context, it's basically a digital records platform for medical clinics, as well as offering a telehealth service where clients can easily interact with their doctors and other medical professionals. Simply put, it's a digital alternative to paper medical records, as well as essentially FaceTime with your doctor, both being services that were very much needed in the medical space, which is somewhat lagging behind in this respect. In 2020, there is no excuse, in my opinion, for this not to be part of the medical space, and WELL Health is capitalizing on this shift, which I think is fantastic. In parallel to this, the global medical issue has forced individuals to seek alternative ways to communicate with their doctors and other medical professionals, which has made this need for Medicare at a distance necessary like never before. As we covered in the previous video speaking about WELL Health, their growth in the second quarter was absolutely fantastic from a revenue standpoint, and they're also expanding aggressively through acquisition into the United States. In the first 6 months of 2020, their revenues increased by 40%, and during the 2019 calendar year, their revenues grew by 211%. So this is a company that is showing explosive revenues, which is quite exciting for this type of new space. The way I'm personally projecting growth figures for this company in the next 5 to 10 years, truthfully, is double-digit numbers quarter over quarter as demand for the company's products continue increasing over time and the benefits of telehealth become even more prominent. And with that said, this will undoubtedly have a positive impact on the stock price as well, and I wouldn't be surprised if WELL Health quickly becomes a multi-billion-dollar company. In fact, the largest player in the space right now is Teladoc at a stock price of $222.85, translating over to a market capitalization of $18.1 billion. And let's keep in mind that this is a relatively new industry that still has significant maturing to do. So over the years, as we increase our use of telemedicine, companies like Teladoc and WELL Health will be able to ride this shift of patient behavior away from physical healthcare. And according to WELL Health, the Canadian primary healthcare industry alone is a $250 billion industry. So as time progresses and more individuals shift their communication with their doctors to a telehealth platform, this is going to have the impact of continue growing this company's size and exponentially growing revenue figures. Another element that's quite exciting for this company that I actually hadn't really considered before making this video is that over time, as more individuals are in WELL Health's database, this is going to make a communication and transparency between different physicians extremely streamlined because patient information is going to be readily available for physicians to share essentially. And it could also be used in the future to better tailor medicine administration administration and track patient trends, but these are just things that I'm speculating that these companies will come out with in the future. Okay, so this is great information for the company long term, but why has the stock seen aggressive price movements over the past couple of days, bringing the company into the billion-dollar territory? I'm attributing this to two main elements that pretty much go hand in hand. The first element obviously is going to be related to the medical issue that is gaining some steam both in Canada and the United States. As we can see from these charts, there have been massive spikes in virus cases in Canada, placing daily new cases at par with the figures of April. The United States isn't seeing the same type of trend, but regardless, numbers are still very high and far from being rectified. So I think that as these figures are sinking in, more individuals are realizing just how important innovations in the healthcare industry really are right now and moving forward. This could absolutely be one of the factors having an impact on Well's stock spiking so dramatically over the past couple of days. The second reason, which is also related to the medical issue, is that with increasing numbers, there are more talks of a nationwide shutdown as cases surge once again. Not only does this mean that people will be staying home again, but it also means that patients will be seeking more than ever digital alternatives to physical healthcare. What this means for a company such as Well Health that is already established as being one of the top players in the telehealth industry in Canada is increased revenue figures over time, as well as an increase in volume of medical visits through their telehealth platform. And this also means that many physicians that aren't currently using the platform will be forced to adopt digital alternatives to provide for their patients. Unfortunately, all the information that we just covered is terrible news as a society, but in regards to a telehealth company, the news we just looked at is actually positive for long-term growth and user adoption. As more people use telehealth services, they won't want to go back to physical healthcare, just like with Uber Eats, for example. Now let's actually talk about valuation though, because the last time I spoke about Well Health on the channel, which was on September 12th, so just under a month ago, the stock was trading at $6.32 a share. This means that since that video, the stock has rallied at 26%, which is honestly quite surprising since there haven't even been new releases of quarterly figures yet. At the current price point, this means that the stock has since rallied around 26% since that video, which even at that time, I was saying that the stock was quite pricey at the price to sales ratio, and considering the fact that the stock has rallied that 26-ish% without any new quarterly figures coming out, this is quite intense market behavior. The reality still remains that Well Health is unprofitable right now, and for a company that is so new and in a relatively new industry, I tend to look more at growth of revenues as well as price to sales ratios as indicators of where this company is going and its current valuation. But at a share price of now $7.89 as of market close on October 7th, this currently places Well at a price to sales figure of right around 32x, which I don't think needs any explaining that this is very high. But hey, the macroeconomics and social trends that we've spoken about earlier on in the video is obviously enough for the market to drive the price up on large future expectations. It has never been a question for me that over time Well Health would become a multi-billion-dollar company, and it's for this reason that I'm bullish long-term on Well Health. But such a dramatic rally in a small time frame could make it vulnerable to volatility on a shorter term if revenues aren't as stellar as expected in Q3 once those figures are released. There's nothing wrong with being optimistic about a company, but let's remember that Well's trailing 12 months of revenues are only $35 million right now, which isn't that much. So with everything that we just covered, I still have a position in Well Health and will be holding it long term. I'm personally not going to be selling because, to be honest, I see this going either way upon release of Q3 earnings, depending on if they're above expectations or not. And anyways, long term, I see this being a $30 to $50 stock for sure. With that said, I know in the previous video speaking about Well Health, I had mentioned that I would be waiting to bolster my position or not, and at current valuations, my thoughts have not changed. The gains that we've just experienced on this stock are great and all, but again, this doesn't really change my thesis on the company as a whole, and I'm going to be waiting to see Q3 earnings before taking another position or not on Well. And just before wrapping up the video, this doesn't necessarily mean that I won't be purchasing more of this stock at $7, $8, $9 a share. It just means that the stock has rallied around 100% since Q2 earnings have been released, and there's no new earnings that were released since, so this is pretty much just all speculation at this point. What are your final thoughts on Well Health and the telehealth industry as a whole? I'd love to know, so let me know your thoughts down in the comments and we'll start up a conversation. If you enjoyed today's content, then make sure to smash the like button. It really helps the channel out. If you also want to learn more about stock market investing, real estate, and other investing topics, you know what to do. Subscribe to the channel and hit the bell button so that you're notified whenever I release new content. So on that note, thanks a lot for watching today's quick video about well health, and I'll see you in the next one.